Hi friends, welcome to my channel. Let's see where Nifty will move on Monday, what strategy we need to apply, what we can expect from the market. Friends, if you look into the market today, as soon as the market opened, there was a very quick sell-off. So what does it mean? Like the seller wants to bring the market down, but there is a buyer who wants to lift the market at a higher prices. So basis on this, I said you to buy the put options, and I made you to trail at cost. At cost, our first stop loss got triggered, and later I noticed like the stops might be triggering at a higher levels, and the selling might continue even at higher points. So right at the top, you can notice here, right at the top, I said you to buy the put options of somewhere like 140 rupees and gave you a target of 200, because I was expecting a Nifty of at least 14,500. It reached our target, but I thought the premium will be somewhere like 200 or 210. So I gave you a target of 200, but it went all the way to 240. 240 was high, and due to volatility, it came all the way again to 200. So what was the reason giving of the puts? I was giving a puts from the morning itself. So I was not interested in any of the calls. The reason was like you can notice, as soon as the market opened, the seller sold. The seller got sold. The seller was selling. You see the seller is way much aggressive than the buyer. And when I came to see here, there was a little bit of a balanced markets. And when he lifted at a higher price, I've noticed like certain stops will be there, stops will be triggering the market, and stop losses might trigger, and the market might come at a lower levels. So right at the top, you can notice like there's a lot of imbalance. That means the seller is selling in each and every bid. The seller is not leaving. The seller is very much aggressive and is selling each and every bid. You can notice. So even at higher levels, the seller is selling. Even the buyers are aggressive, but still the seller is very much aggressive. You can notice here the buyer is buying at 13,000 lots, but the seller is selling 31,000 lots. That is like selling is coming more aggressively. So I saw this and I made you to buy the put options right at the top, and which gave a very good profits for us. I didn't ask you to book the profits because some of my clients, they were asking me to give even the bank nifty puts as well. So I gave you the target and I just left you so that you can book at a target levels like 200. What was surprising today's market is like, as you can notice, at 17,500, once the market came and there was a selling, but the market didn't go down. The second time the selling came here, the market didn't go down. The third time the market came, you can notice here, the market came and it came a little bit lower, below than 17,500, and they came and they sold with aggressively, but still the market didn't move at a lower prices. So what does it mean? It means like someone is sitting and someone is accumulating all the bids. The people who are selling, the big players, they are selling. At the same time, someone is accumulating at lower levels. So it is very much clear like someone is sitting and someone wants the liquidity and someone wants to buy, but he is not aggressive. He doesn't want to lift the price at 17,460, 480, 500. No, he is just buying at one price point. Whenever we see such kind of a price action, so it is called as someone is accumulating at lower levels. As you can notice, once again the selling came. There was 54,000 contracts being sold, but the price didn't go lower. It was just staying at a same price point. That means some large orders were there, like the buyer is interested and he was buying each and every price point. So multiple times these levels it came and it retested. You can notice like 17,480, there is a buyer. That means someone has bought very aggressively at these levels. So what we might expect from the market? I'm sorry. So what we might expect from the market on Monday? So 17,480, that means 17,500. There is a very good amount of a buying came, and the buyer was lifting each and every bid. So we have to see whether the 17,500 will be broken decisively or not. If 17,500 is not broken decisively, then we might see a very good short covering rally and the market might go to 17,700. And you can notice like net to net there is a very good amount of a buying delta. That means the buyer has bought and he has accumulated. So whether we have to see if the market is accumulating another day or is it auctioning at a higher levels. So if you go into the structural format, I'll just take you into the structural format. You can notice the market bidded at a higher price, and right at the top I gave you to buy the put options, and put options gave us a very good profit. Once the market came, then auctioned. Second time the market came and auctioned. Third time the market came and auctioned. Fourth time the market came and auctioned. That means someone is sitting at these levels and he is buying not once, not twice, not thrice, not four, around 4 to 5 times. Someone is accumulating at 17,500 levels. So we should carefully watch at 17,500 levels. If the market opens flat and if it crosses 17,500, we'll have to buy the put options, and our first target should be like 17,400. If the 17,400 breaks, we might even see like 17,300 as well. If the market opens flat and if it goes down, we'll take the put options and I will target up until 17,400. If the market opens flat and if it crosses this swing 17,560, then we'll try to buy the market and we'll target up until 17,700. So my suggestion is like we'll just try to buy the market even if the market opens flat and if it goes higher, and if the price sustains above 17,560, then we'll try to buy and we'll target up until 17,700. 100 points we'll target and we'll book our profits. But you have to see whether the buyer is lifting aggressively or he is lifting very passively. So if the buyer is lifting passively, we should avoid the options. If the buyer is lifting very aggressively, then the option premiums will increase very fast and we can make very good money. So this is a range. As you can notice, there is a range. The range is between 17,560 and 17,500. So if the market breaks at these levels, we'll try to buy above 17,560, because there is a lot of shorts. There is a lot of call writing in 17,500. So these people has to run for a cover. The market might propel up until 17,700. If the market is opening down flat and if it's coming down, we'll just take the put options below 17,500 and we'll target up until 17,400. If 17,400 crosses decisively, we'll even target up until 17,300. If we see a very big gap down, we'll just wait for the price action. Is the price action making this, or is the price action continuing this? If the price action is making this, we'll try to position ourselves at these points. If the price action is making this, we'll enter here and we'll put 50% of the stop loss and we'll play for the downside. The best strategy will be if the market opens flat and if it crosses higher, we'll just buy somewhere like 17,560. There will be a good short covering and the market might rally at a higher points very aggressively. So let's wait and watch. If we see a very big gap up somewhere like 17,560, definitely we'll be looking to buy the market and market will rally at a higher levels. Well, I explained all the three possibilities, like what we can do: the flat, gap down, gap up. I'll be updating even Nifty options as well at my Telegram channel. Please do subscribe my Telegram channel. If you like my video, please share to your friends. And if you have any doubt, please comment at a comment section. Thank you. Thank you so much.